Welcome to the new weekly Harmonic scanner analysis. In this week I would like to show you what the Harmonic scanner has detected, which symbol, which pattern, and to make a technical analysis, just to explain how to make the analysis when you receive the notification on the Telegram for the Harmonic scanner that the pattern has been detected, and you can make the analysis on the chart. The analysis has done just to confirm the pattern that has been detected and the direction from the scanner to increase the chances of being profitable on that pattern. I have picked this one symbol, euro against Czech crown against on the 4-hour time frame, and we can see it was a bearish bad pattern formed on the chart. And first criteria that I'm currently using is that pattern in line with the trend. We currently see that on the chart the price is moving down, and it is a pretty healthy downtrend, which means the price is trying to reach lower levels. And this bearish bad pattern is also showing that the price could reach again lower levels, which means it is in line with the trend. After that, we can see what are the levels detected here by the scanner. This is the stop loss level, this is the entry level, a potential reversal zone, a gray area, the take profit level 1 and take profit level 2. As a next step, I make the technical analysis, and that means just putting the horizontal line, which are the support and the resistance levels, just to see where the price is bouncing and where the price could go, with that means reaching and bouncing from this area of support or making a bullish or bearish breakouts. When I put them here on the chart, I can see are the levels that has been detected from the scanner are in line with this technical analysis, which means are those levels also respecting the support and the resistance levels, or they could be modified slightly. Now let me check this one, put these levels here on the chart and see how the price behaves around these levels. Here it is. Let me zoom in a little bit so you can see. So the first criteria is okay, the downtrend, and we can see the pattern is showing that the price could reach lower levels. Here are the levels I have put. Okay, we can increase the thickness of this one so they are the same. We can see that the stop loss is here. We can see that potential reversal zone is right here where the resistance level is, and the entry level is slightly above this area of resistance. So for now, what I could do, and also I would adapt this entry level around this one here, around this area of resistance, and especially this line here that is visible. So this potential reversal zone is very good because it encompasses the area around this area of resistance. So it is not a simple line as a blue line, it is an area where you could wait for the price to come to that area. The price has come here, we can see that here on the chart. The price has touched the resistance level, and then the price has moved down. The price is moving in the direction where this bearish bad pattern is showing. Then we have a stop loss level, which is above here. In my case, I can see that there is still one resistance level before that, so I would move stop loss right here, because if the price goes above this area of resistance and it reaches this area of resistance and goes even further up, that means that this area of the potential reversal zone is cancelled because the price is already gone above that. So I would not trade this one, and I would reduce the stop loss right here. So the reward to risk would be even higher at the current moment because the stop loss area has been reduced. And now let's see the take profit level 1 and 2. After the price comes very close to this one here, we can see the price has already gone down and reached a take profit level 1. In my case, I would move a take profit level just above this area of support, because when the price goes here, reaches this area, makes a bearish breakout below this area of support, the next target will be around this area here. So I would move this take profit level 1, and you can see it could be triggered already. It will be triggered, and it has been triggered already, which means take profit level 1 is okay. Now the take profit level 2 is here below this area of support. When the price makes a bearish breakout below this area of support, the next target is around this area of support. So the next target I would move like this. I would like to have a take profit level already reached here, but I would also put a take profit level 3 right here, because the bad pattern is showing that the price could reach this area of support. So I would put also take profit level 3 here, but the take profit level I would move here. Now I'm expecting that the price will make a bearish breakout below this area of support and reaching take profit level 2, which will be a bearish bad pattern which is successful and profitable. While the price has reached take profit level 1, I would move a stop loss just below the entry level. So if the price goes against me and reaching again the entry level, I would move from this trade with a small profit. A small profit is better than waiting for the price to come too close to the old stop loss level and making this trade from the profitable being with a loss negative trade. So it's better to get out from a small trade and wait for another bullish or bearish bad pattern or other patterns and then trade again. But the price also could go further down, reaching take profit level 2. So this is just minimizing the risk. While I'm still in profit, I would like to lock this profit. You can also move this one here if you would like. It is up to you to move the stop loss here, so you increases the profit if the price goes against you. Then currently I'm waiting for the price to go further down, reaching take profit level 2, and then I'm expecting that this trade should be completely profitable, which means this bearish bad pattern should be profitable. This is the way how I'm making the analysis and also picking only the best patterns that are detected with the pattern. There are many more patterns, you can see that during this week, around 20 of them, but I have only picked this one, and this is something, another one I would like to discuss with you. This pattern has been unsuccessful, which means failed, because the prices reached the stop loss level. But when I would like to make the analysis, technical analysis and first criteria to see, we can see that the price was in the bullish trend, then it is slightly bearish, and then the price was forming a bullish trend. It was US S&P 500 on the 4-hour time frame, and we can see the price has formed a bullish trend, very clear, and then making a bullish bad pattern that has been targeting higher price levels. We can see that the price has reached the potential reversal zone. It has gone even further down and touched a stop loss, but then reverted and reached take profit level 2. I would like to make the analysis just to show you what could happen if you make the analysis when you get information from the scanner. And that means the first criteria is okay. We have a bullish bad pattern suggesting further rise in value, which is in line with this bullish trend. Then I'm making technical analysis, which means I'm putting support and the resistance levels here. Then seeing how the price behaves around this area of support and the resistance to see where is the entry level, where is the stop loss level, where is the take profit level, and are they in line, or I should adjust them slightly, like in the previous example where I've shown you how the price is behaving. Let's see this one here, and I'll put this one also here. Let's put another one here. Now this is how I would make the analysis. Oh, I'm missing this one here. Here it is. So these are the support and resistance levels. And if we make the analysis where the potential reversal zone is in between this area of resistance, this area of support, and this area of support, and we can see it is in between. The entry level is right in between this area of resistance and this area of support. If I make the analysis and I can see this scenario here, I would immediately say I would move the entry level here because it is right here at the support level. If the price goes below this area of support, I'm expecting that the price will reach this area of support. So if it reaches, this will be the entry level. Then I would move my stop loss just below this area of support, because we can see the price could reach, if the price goes below the entry level, which is right here, the price could go slightly down. But if the price goes to this area of support, we can see in the past how the price has behaved around this area of support. When the price was touching, we can see the wick from this candle has reached this area of support, and also we can see an area where the price is touching. So I would move my stop loss right here around below this area, and we can see slightly there is a chance that the price could trigger and could not trigger this area of support. So this could be also a profitable trade. If you have entered here, the target would be here. Now let's check the take profit levels. Are they in line? The scanner shows that this take profit level is in between this area of resistance, this area of support. I would move this one right here because I would like to get from this trade immediately before the price reaches this area of resistance. If the price comes here, it is trade is valid, and the price could reverse back down immediately, not touching this area of resistance. There is other scenario, the price could continue to rise in value, reaching the next resistance level, so I would move also the take profit level 2 to this area before the resistance level. I would like to get out from this trade before the price reaches the resistance, because it could happen that the price reaches this area and revert back down, not touching this area of resistance because of strong selling pressure, and also the buyers who have pushed the price from here could exit their trades before reaching the resistance level. So this could also trigger that the price do not succeed reaching this area of resistance. I would like to move out from that trade before that. So these are the setup how I would make this one. Because of this area of stop loss, it is very tricky that the price could be triggered as a failed one, because the price could trigger this sell stop, and that means also a spread from your broker is very important. If it's very narrow and you put the price right here, the price probably would not trigger this stop loss, but it could reverse back up. This is very tricky, this bullish bad pattern, and it is more likely that could be a failed one. But we can see the price has returned back above and reaching the take profit level if the stop loss is wide enough. So it's very tricky, not very clear, this bullish bad pattern. I just wanted to show you how this looks when you make the analysis to adjust these entry level, stop loss level, take profit level to be in line with the technical analysis. Sometimes it works, sometimes doesn't, but that is why we have a reward to risk ratio, which should be a 3 and more. So if you miss one trade, the stop loss is activated. In the next profitable trade, you will have much more profits covering the previous loss. It's very important to have a good reward to risk ratio. There is no other patterns that are in line with the trend. I have checked them all. For example, let's take this one example. We can see there is no clear trend, the price is moving sideways, so I immediately skip this one and not watching very closely. So this is the first criteria I'm using, so feel free to check the Harmonic scanner, use the analysis like I'm doing, or make your own analysis if you have your own edge, and make the analysis on specific bad patterns or other harmonic patterns, and make the analysis, see what works, and then try for yourself. You have a 7-day free trial, so you can also check the 7-day, receiving these updates from the scanner and make the analysis. But when you make the analysis, when it is a profitable trade, then you will be in very good position, because this reward or risk is very good here detected by Harmonic scanner. And you can see that most of the time reward or risk is around 3 and plus, 3 plus, and then there is even 5 plus, which is a very good risk reward ratio. So that's all for this week. If you have any questions, feel free to check. Also join other traders, especially gold members. If you pick a gold membership, you will have access to the Telegram, where I'm sharing also the details with the new videos explaining how to make the analysis, and if there is any questions, I also answer to them. Especially if you have joined, you will get answer as soon as possible from my side in written or video format. That is why it's very important to join if you would like to receive these updates. That's all for this week. See you next time, and happy trading.